Back to my channel, and I know I was supposed to give you guys a live weekly analysis with my markups and everything, and I honestly tried. I don't know if I'm just not reading the YouTube rules or something right, but I'll go through this week and try to figure it all out. Anyways, I still did want to give you guys my bias and what I think about certain pairs and everything this week. So, actually, no, that's not my website. That's TradingView. tradingpdf.cvm. Okay, so as some of you guys know, I did start my new blog, and it's really awesome and cute. Well, I may be a little biased just because it's something I created. Still working on it, you know, trying to make it look cute and nice and presentable for you guys. But here I post my analysis for the week. A few of you guys reached out to me on Instagram and asked my opinions on certain charts. So, here's me just showing you my charts now. So here are my markups for gold. I guess we can do it this way since I wasn't able to live stream it. I'm so sorry, guys. But basically, this is what I look for. You know, I do my usual my usual multi-time frame analysis. I go from the monthly, the weekly, the daily, then the 4-hour, and then by the time the session comes, I'm looking at 1-hour levels, and then I enter in on the 15-minute. And I know that sounds like a lot of levels, but I promise you, like, if you look at this chart for gold right now, I'm going to expand it just a bit, and these annotations come from the playlist that says trading strategy on my YouTube channel. And so if you look at it, it's not that many levels, because you want to know why? The higher time frame levels overlap with the lower time frame levels. Whoa, who would have thought, right? At first, when I first heard that, I was like, nah, you lying, let me see. And then I saw it and I was like, oh, okay, there we go. It's true, and it makes sense because the people with deeper pockets, they're entering in on a daily chart. So of course, if it's a level on the 1 hour, maybe it came or sparked from a monthly level, and you just never know because you never looked at the higher time frame chart. But before we get into all of these charts, I want to tell you something. This is not me trying to change your bias. I am not trying to change your mind at all. The levels are here for you to see. The red levels are where, you know, you can expect selling, and the green levels are where you can expect buying. Now, if your bias is bullish, you are expecting these green levels to hold up and these red levels to be broken and traded through. However, if your bias is bearish, you'd want to see those red levels hold up, as in like they can't get broken through, and you want to see the green levels be traded through, like all the way. So you can just go through your charts, marking it up that way through your bias. So if, let's say, for example, if you are bearish on gold right now, then you would be expecting all these green levels to be traded through. However, if you are bullish on gold, like let's say you came, I don't know, maybe at 8:20 in the morning and saw like it was moving up, and you drew your fib and you were at a green level pictured on this chart, then you will enter into a buy. But yeah, so you just want to see where you are in the market and these annotations. So I have low in between two highs. So this is a perfect example of the low in between two highs. I know some of you can't see it that well for some reason. Well, a lot of you can, but it's just one or two of you who still have trouble with finding the last down candle, and the last down candles are literally the last down candles before the expansion move. So this is a 4-hour chart, but right here you'll see me notate this as a D for daily. So this is a daily last up candle high, a daily last down candle. Oh, sorry, yeah, this is supposed to be down candle, typo. Daily last down candle, daily last down candle, and here is a low in between two highs. So the up candles are notated like in red. Like this is an example of a last up candle. If you would have drew it out in time, you would have expected that bearish block of price action. So now moving on from gold, you can screenshot those levels and trade them according to your bias. And I feel like this is a very any bias would work, just because hedgers are profitable off this model as well. They trade off of retracements and things of that nature. But just be careful, and I'm not trying to influence your bias, but please do look at the order flow of the chart. How are things moving? However, if you did want to short-term retracements, if you wanted to sell short-term retracements, that would be okay, but you just have to know the levels to do it at, so it's safe for you. That's my opinions on gold. Mind you guys, I only trade US30, so if my levels look funny, do not pick at me. Okay, so that was gold. Now let's get into Euro USD. Again, not trying to change your bias. I always put that there just so people don't think like, oh, Tori told me to sell. Oh yeah, I scratched out things there. That's ugly. Disregard that. I'll go back in and fix it. But anyways, so this void slash expansion comes from a higher time frame chart. These are the 4-hour levels that are notated on the chart. And this is a last down candle. I scratched it out because I wanted you guys to go in and, you know, I don't want to tell you guys the answers all the time. I want you guys to go in and find it for yourselves. And like looking at this Euro USD chart, right? You can go in and pull up the same Euro USD chart on TradingView and mark these same levels, right? So you're actually actively learning. So you'd mark this last down candle and see which time frame it was from. You know, wouldn't that be cool? Yeah, like actively learning. I'm trying, guys. I'm not the best teacher, but I'm trying. And so as stated before, if you are bearish, you expect red levels to hold and green levels to be broken through. However, if you are bullish, you expect green levels to hold and red levels to be traded through. So like old highs, like they target the buy side liquidity above these old highs. And what I mean by that is that, you know how breakout traders, they'll put their buy stops at the top of highs for some reason, or people who had participated in this down move, right? They will have their stop loss here, right, above the old high if they had rode that entire move down. Hopefully nobody's still in this, but just as an example of them hoping like, oh, it's still gonna go down, it's still gonna go down. Their stop losses are there, and then the breakout traders buy stops are there. So just think of the market in terms of liquidity. If we took out sell side liquidity, where are we going to go to next? We're going to take out buy side liquidity. Again, not trying to influence your bias. You have your bias coming into this. I'm just, you know, simply giving you some levels to work with to get the most optimal trade. I know a few of you may have seen ICT's optimal trade entry video, and if you have, you compare these levels with that technique, and maybe this will help you out a little bit more going into the trading week. Okay, so that was Euro USD. What's next? Let's go. Oh, GBP USD. So, it's loading. Again, I wanted to not, you know, give you guys the answers. I want you guys to go in. I felt like if I gave, you know, the final example with Euro USD of what I'm looking at, and you saw my videos, you know, but here are the levels in price action. This is a weekly chart, and I wanted you guys to also go down to the 4-hour and find these very same levels as well, you know, marking up the respective 4-hour levels that correspond with this as well. And yeah, so here I notated a last down candle. This is a stop hunt from the monthly, if I remember correctly. This is a last down candle going into that weekend. You see price respecting it. Buy side liquidity is above this high right here, and also above these highs. So if not trying to influence your bias, if you're bullish, expect the green levels to hold. If you are bearish, expect the red levels to hold and the green to be traded through. And if you're bullish, expect the green levels to hold and the red levels to be traded through. So imagine the market just reaching for stops, reaching for stops. And yeah, you'll start to see price a lot differently from that. So that was GBP USD. Oh, and US30, my girl. This is something that I am used to, something that I love and hold dear to my heart. So here are the levels that I have on my chart. And technically, I'm kind of sort of giving you the answers to this one if you know what these things mean. So order block, it just basically means last down candle, right? And the month, what is it? the time frame of the chart is the first letter sometimes. So if you see M, think monthly. If you see D, think daily. So a monthly level, a daily level. Yeah, and the reason that on the 4 hour, the smaller time frame charts aren't notated is because they overlap. So above these old highs, I have this cute little circle notating buy side liquidity. So if we do end up being bearish, price will tap through that and then smack back down, or we could just continue heading up, trying to fill in the gaps from over here and reach for these levels. So it's all about knowing where you are at a certain time in the markets. If you watch my last videos, I said, 9:30 is that special time. So at 9:30 in the morning, if you look and if you mark charts, if you mark levels on the 4 hour and on the 1 hour, and you see where you are in the morning, you're like, ooh, I'm at a red level, I guess it's time for me to sell. You sell. Or ooh, I'm at a green level, I guess it's time for me to buy. So just always have in mind where you are in terms of liquidity in the market. Like, what did you just do? Did you just run out stops below an old low, right? Did you just return to accumulate more buys at a green level, right? Now, if we've done that, where should we reach for next? Up. Think about how bullish weekly candles are formed. When will the retracement be? And you also want to consider news, guys. So I'm about to go in and look at Forex Factory news with you guys now, and my chart settings, I have it filtered to all USD news because I trade US30. So I'm looking at USD news, and there is 2 red folder events on Thursday. So, and we have an FOMC member speaking, yay, in the evening time. So the main thing with these news events, right? I really don't care about the numbers. We don't care about the numbers. You want to know why? Because this has already been priced into the chart. Honestly, I'm just giving you guys that's the truth. It's already been priced into the chart. Now, I'm not saying fundamental analysis does not matter, because it definitely does. But what I'm telling you is it's already been priced into the chart, right? So with that being said, is that the setup for these particular news events are going to form for that time frame to showcase the volume. So this is, imagine this just to be like the banks or the person with big fat pockets excuse to go in and displace price. So if you ever wonder why you see these huge engulfing candles, oh, it's because of the news. Yes, the news is kind of like like an excuse, like, oh, the news happened, so people expect there to be a bunch of volatility, so I can go in and I can buy up all the things I want to buy up, right? Says the market maker or robot or algorithm, whoever controls this thing. And that's where you expect it. So let's say if Thursday, we know we have these red folder news events, we know at Thursday at 8:30 a.m. we can see some type of manipulation, right, going before we go into that 9:30 a.m. move, and just framing your trades based off of this. Or maybe like the PM session for US30 may really be kicking off and full of volume because we have these like late news events within the day. So just being mindful of this. And if you are a scalper, I want to tell you to stay to the side. But if you're one of those, let's say you do session to session, that's fine at that type of day trading. But if you're one of those 20 hit it and quit it, I don't even think you could. Wait, yeah, no. Can you do 20? Yeah, the average movement for US30 is like what, 4,000, 6,000 points a day, maybe even more than that. But let's say you're trading a Forex pair, that will be your same mentality. You're going in and you're thinking, okay, so they're going to do something around this time, I need to be mindful of that. Or let's say if you're a scalper and you're going in for 20 pips, you need to, for Forex players, you need to sit to the side. But if you're a session by session type of girl, guy, or gender neutral person, you want to just be mindful of this, and this could give you a nice entry setup. So without further ado, guys, I will try to figure out this whole live stream thing for you all. Yeah, I'll try. But I hope this video helped anyway. And if you have any comments and suggestions, leave them down below, or go to my blog and submit a request, and I can post a chart there for you. And you know, I'm always on Instagram and stuff like that. And if I haven't answered your question, I probably answered it before. And I'm so proud of you guys. Like, some of you guys have been telling me your stories and how you're winning with the trading plan playlist, and I'm so proud of you, really am. Oh, and here's the playlist for those of you who have not seen it. It is right here. It's here. It says, oh, let's pause that. It's the trading strategy candlesticks price action playlist, and it just really gives you my entire strategy.
Welcome back, trading babes. I'm gonna be
ooh, my voice really sounds like that. Okay, but guys, I will talk to you later. Bye.